All right, welcome back to another episode of Asset Coach and Tax Strategist. Just so you know, we're not giving financial advice. This is just for educational purposes only. But today's episode, I am fired up and excited about this episode. If you watched any of our content, you understand anything that we do. We talk about Warren Buffett and Berkshire Hathaway quite often. There's a lot of wisdom in wisdom. And he has been the most disciplined person I've come to recognize in a very consistent lifetime that he has spent. He's always been very true and disciplined to his craft and what he does and how he runs the Berkshire Hathaway with his previous partner, Charlie Munger, who has passed away. And Warren Buffett is, he's long in the tooth as well, right? He's not a spring chicken, but his wisdom that he continues to put before us. But more importantly, we got to look at the history of Warren Buffett. We'll look at the history of Berkshire Hathaway. So today's episode is talking about Berkshire Hathaway. What has he built? He really has, if you think about, built the foundation of what mutual funds are, right? A mutual fund is a pooling of investor assets to go buy shares of companies, public companies. Warren Buffett has done that, but actually has bought companies and kind of created his own mutual fund. We'll go through that. But his logic and his conversation and the discipline of what companies he buys versus what companies he invests in. Now, what's the difference? Well, investing in a company is where he's actually buying shares and the effect of that company. So like Apple. He does not own Apple outright, but he owns shares of Apple. Coca-Cola. I think he still has Bank of America and Wells Fargo, American Express, or a little bit of them are examples. Occidental Petroleum, right? I actually think he's going to buy them here pretty soon, depending on how things shape up this next year. He's bought so many shares. He is a majority owner of it. I would imagine he's just going to buy it outright. Not completely sure. But then you have companies he actually buys and owns. But the discipline of why he buys a company versus invests in a company is really the same. It's management. Are they profitable? What's their financials look like? Is this something that is long term? Can we add to it? And can this help what we're doing as an overall conglomerate of Berkshire Hathaway? Remember, Berkshire Hathaway, when it first got started, was a textile company. It went under. Yes, Warren Buffett owned it, and it went under. And he turned it into this behemoth holding company owning multiple companies. So let me share my screen here, and let's look at what this looks like, and we'll go through this. All right. So Berkshire Hathaway, everything owned by Berkshire Hathaway. Now he has it's broken into different segments. So he has insurance up in the top left. He has utilities and energy. He has railroad, service and retailing, and manufacturing. Okay. So very, very strong balance sheet. And these are all the companies he owns in each of these. And then down, companies he partially owns. Okay. And look at this. This is crazy. He partially owns quite a bit. Okay. These are monies that he actually has investment and owns stock in. So he owns 50% of a company owned by Berkshire Hathaway. Okay. 50% of Electric Transmissions Texas Energy, Iroquois Gas Energy. This is more retail. Will increase to 80% in 2023. So at the time of this, it was before 2023. So he owned 38.6. Now he owns close to 80%. Kraft Heinz, Coca-Cola, Bancorp, B of A, Moody's, American Express, and BNY Mellon, BYD. This is a Chinese company. Mitsu's a Japanese company. Apple, Itochu, I think this is Japanese. Chevron, Charter Communication, GM, Verizon, and Mitsubishi, also Japanese company. Oh, and this is all based off of 2021 annual report. So this is a little bit dated, but either way, you get the idea. So here's a crazy thing. So let's look at service and retailing. So Dairy Queen, Affordable Housing Partners, Automotive, Borsham's, Business Wire, Court. So a lot of things, jewelry. There's jets in here. There's furniture in here. There's let's see here. There's a trading company, Occidental Trading Company, Pampered Chef, See's Candy. And he owns a trucking company, Extra Lease. Okay. He also owns a railroad company. So from a cost perspective, he can ship these goods and services using his trucking company and his railroad company. Not bad. Utilities. Here's the Berkshire Hathaway Energy. So he's bought a lot of utility companies and he's turned them into an overall energy unit. Okay. This is very important. Okay. As well as insurance. And really his insurance companies, I think there's 11 here. He owns 12. Alacami is not on this. His most recent purchase last year. But anyways, National Indemnity was his first insurance company that he purchased. So this insurance, he uses this conversation in his shareholder meetings. He tells you the secret to his wealth building is the float. He calls it insurance float, where he utilizes the reserves of the insurance to be able to go buy and invest money into other companies to help grow. And he's basically borrowing from himself. Okay. The insurance float. Okay. Manufacturing. So products and services. Look at this. Duracell, right? Bricks, Clayton Manufacturing, shoes, paint, right? Underwear, right? So all of these, Johns Manfield, Marmon, these are all Lubrizol is. I'm surprised this isn't in energy, but this is a kind of oil products type company. Precision cast parts. So manufacturing is it's a good mix up and diversification of manufacturing. So he's built this out in a way that allows all these companies to produce cash flow with the backing of Berkshire Hathaway. So financing wise, if they were to go out to get a bank loan or any type of financing, they can do it through Berkshire Hathaway, right? So remember one of our previous episodes, we were talking about cash value life insurance, bank on your own, infinite banking, that type of concept of borrowing or utilizing your assets to create other assets was the point of that episode. That's what he's doing here. And so, but let's say they decide that interest rates are low enough and you go to an outside bank and you want to do risk management. Well, Berkshire Hathaway has one of the highest credit ratings. So they're already going to get cheap money. Okay. So sometimes it makes sense for them to do that. Either way, phenomenal, absolutely phenomenal. If you want to actually build a phenomenal portfolio and you want to understand how to build wealth, how to diversify wealth, how to create cash flow and create this, I think you do yourself a favor by jumping into Warren Buffett and researching and learning more and more about Warren Buffett. Do I like some of his political stance and some of his political stuff as a person, as an individual? Not necessarily, but from a business mindset, I really believe that he is of a mindset that really is something that is duplicatable or should be learned by us as well as part of how we want to go about our own assets and building our own wealth. Let's look at another article. I'm going to go ahead and share my screen again. And let's look at another article talking about how Berkshire Hathaway so this clickbait, right? This is one of the largest companies in the world and the stock is an absolute bargain. This is based on January 18th, 2025, Ryan Vanzo with Motley Fool. So fool.com. What are they talking about? Berkshire Hathaway. There are 10 companies in the world that currently have a market cap over $1 trillion. It would be reasonable to assume that none of these businesses have bargain stocks. These companies are very well known and their valuations prove the huge swath of market already believe in their prospects. But there's one company on the list, the largest publicly traded stocks, that is arguably a screaming deal. This particular company just saw its valuation dip to less than $1 trillion Patient investors looking not only for growth, but for protection during market volatility should take a closer look. All right. So Berkshire Hathaway B shares. Okay. Look at this. So this is the year performing, market cap $1 trillion. Again, just dropped below. 52-week range was at as low as 366, was as high as 491, and it's at a 467 right now. Gross margin 21%. Jeez. So this Berkshire Hathaway is a mega cap stock. Okay, it is one of the tops. Okay, and the reality is that it's one of the just crazy. Look at this. Although business lines may be somewhat diversified, nearly every other company worth $1 trillion or more focused on particular. Apple's focused on technology. Saudi Arabian oil is focused on fossil fuels. Tesla's focused on electric vehicles. Berkshire Hathaway, right? What have we been saying? This is your mutual fund if you want. Isn't reliant on any one sector or industry to thrive. That's due to the unique business model that no other $1 trillion company can match. Okay. He's built a $1 trillion company by basically utilizing what he calls float. So these businesses do generate underwriting profit. So what he's talking about is insurance companies, and he talks about this insurance float or this all the time. Float is essentially interest-free capital. So he borrows from an insurance company's reserves to invest and buy into other assets. Very simple. Okay, very, very, very simple. How do you do that? Well, we teach our members how to do this. When an issuer writes a policy, collects a check, so he goes through what insurance float is. Okay, this is a premise. He talks about this in his shareholder meetings. This is not a secret. This is not the Motley Fool got the inside scoop. He talks about this in his shareholder meetings every year. Okay, he tells us what his game plan is. This is what I'm talking about. He lays it all out. But how many people are duplicating what he's doing? Not a lot. That's the crazy thing. Buffett has used the capital to invest in other businesses, everything from tech, energy, transportation, consumer. So he's used insurance float to buy and diversify in other investments. They've grown to graduate levels. Most of Berkshire's value today does not stem from its core insurance business, but rather from its portfolio of fully owned and publicly traded securities. Notice it says fully owned and publicly traded, both in the same. So he earns a portfolio. He earns about $1 billion, a little over $1 billion a year in dividend income from his investment portfolio. So that's just cash flow that he's getting. Over $1 billion a year. He shows up January 1. He's already made $1 billion. He knows based on dividends. Okay. Let's see here. This is what Berkshire Hathaway bargains look right now. So it goes into more of the fundamentals and the technical analysis compared to S&P 500. You can look at the valuation, total return, S&P 500 return versus Berkshire Hathaway total return. Big difference. Berkshire Hathaway's doubled. Okay, if you look at their Y chart example. So I don't know. I think it's worth an option. If I don't have any money in the stock market, and this is not financial advice, speak to your financial advisor for financial advice. But at the end of the day, for me, and when I look at this, for me, my focus, my idea is I'd rather own and run businesses. I don't have any money in the stock market. I'd rather be in control over my destiny. That's me personally. Okay. Invest in alternative assets, that kind of stuff. But a lot of people have funds in the markets. A lot of people have retirement accounts in the markets. And so literally, if you have, a diversified portfolio, you've got $500,000 sitting in a retirement account. This is not investment advice, but I would see it be completely okay if you have this diversified portfolio of mutual funds for you to own Berkshire Hathaway, have $500,000 in Berkshire Hathaway alone, because it's going to outperform possibly or do what those mutual funds are doing, but it's structured. You see the diversification. Warren Buffett's not just going to turn around and sell one of the companies they own. He hasn't. He buys and holds. Now the investments in these partially owned public companies, he does change his holdings in that. But at the end of the day, again, not investment advice, but I probably wouldn't be too upset with just owning Berkshire Hathaway as my investment portfolio. Is it sexy? No. But at least you wouldn't have to think about it, right? And that's kind of what most people put in their mutual funds in their retirement accounts, is not to think about it. That's what most advisors are doing, right? If I were an advisor, I wouldn't be putting money into mutual funds. I'd be putting my clients' money into Berkshire Hathaway if I were a financial advisor. That's just me, right? It just seems to make more sense. Are there other companies like a Berkshire Hathaway? I'm sure there are. There's other companies that within the tech world or other industries that have diversified their ownership of product lines by buying other companies that have certain type of technology to improve their technology. But everybody knows Apple is Apple. We don't know the hundreds of companies that they've purchased over the decades to make Apple what it is today, right? We just know it as Apple. Right? Berkshire Hathaway, Berkshire Hathaway, but they're very public in showing all the companies that they own. They just didn't turn all of them into just everything's known as Berkshire Hathaway. So anyhow, again, not investment advice, just some thoughts and food for thought. So appreciate you being here, and make it a great day.